Hey, it's Clay Trader, and this will be a video chart on ticker symbol MRNS. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So while this here may look like several days worth of time, it's actually today's price action broken down into 30-minute time slices. I like to this time frame. I think does a good job of telling the quote-unquote story of the price. And in this situation, makes mapping out a very logical question quite straightforward. And the question revolves around the fact that today was a good solid move. Now, sure, the price did pull back, but from where it closed compared to where it was yesterday, still a good solid move. But that does bring up the question, well, is there any sort of true power behind this move? Is there any sort of genuine strength, or is this just some sort of dead cat bounce, knee-jerk reaction type thing? I have no idea, but like I said, by using charts, we can make answering that question very straightforward. In my mind, it all revolves around a single level, and that level is right here at, we'll call it the 94-cent mark. Why is 94 cents so important? Well, hopefully we can all agree on the logic that price movements with genuine strength, with true power, the price is going to progress forward. The price is not going to go back to where it was. I'm assuming you're saying, hey, thanks, Captain Obvious. Of course, if a price movement is truly strong, it's not going to go back to where it was. So with that in mind, think about 94 cents. Any sort of closes below that point, or worse yet, if the price separates to the downside, what is that doing to the price? That's putting the price right back to within this range where it already was. Again, going back, not a sign of true strength. Whereas let's say the price pulls back here, bounces around, and then heads back up. What would you have in this situation? Well, you'd have a set of lows right here. You'd have this set of lows down here. If you picture each one of those as stair steps, well then, hey, you got stair steps progressing in the upwards direction. And that's the name of the game, right? Truly strong moves make progress as time goes by. So to me, 94 cents, a very important level. For the simple fact is you don't want to see the price falling back inside of the range that it was already at because that is just what the fake moves do. Now, what about levels of resistance? If this move is going to continue upwards and get back up, into the $20s, where are some of these hurdles at? First area of resistance on any sort of bounce going to be right up here at $7 for whatever reason. It seems kind of random, but multiple times in the afternoon, once right there, and then a couple times in a row right there. Bulls try to get up above $7 and couldn't quite do it, so that'll be the initial area of resistance. The next key level after that, right up here at $1.15. After $1.15, then you can start talking about, potentially, the chart getting back up to this range of the chart. But as it stands right now, no point in talking about, this part of the chart until the bulls can first get up above the hurdles at, again, $7 and $1.15. All in all, though, good solid day, big volume, so we'll see if the bulls can build upon this momentum next week. One of the most popular questions I get is, hey, Clay, how do you find the stocks that you trade? So what I've done is put together this free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then by all means, click right there to get access to the guide. The guide itself is very short and to the point, and like I say, it is free. Thanks for watching. Happy New Year.